Some of the most popular stocks in recent times were hit hard in overnight trading, dragging the Nasdaq down by about 1.5% in US trading and weighing across the broad market. And it was interesting to see what was hit in overnight trading. And while a lot of people are pointing to the semiconductors and concerns there about tariffs, about potential changes in central bank policy coming out of Jackson Hole, about FOMC minutes, and about earnings and short sellers, the reality is what dragged the market lower in trading overnight was more sellers than buyers. And it's a good reminder of what really drives markets. It's about supply and demand. And at the moment, there's a very strong supply of some of the most popular stocks in the market, and we're seeing that really weigh on their performance. Palantir was one of the hardest hit in overnight trading, down 9.4%. And while there are reports out this morning that a well-known short seller believes that the stock is overvalued, that's been the case for at least months and possibly years. So the selling that came ahead does appear to me, at least, to be more related to the macro risks that are on this week and the potential for a pivot in central bank policy or another announcement that might scare the horses in the market. And so it was previous popularity that really drove stocks down. We saw Oracle, AMD, Super Microcomputer, Coinbase, all down by more than 5% in trading overnight, continuing a route that started 4 trading days ago. And that selling does look set to continue, with most of these stocks finishing near their lows for the session, suggesting that there was still supply to come. We did see some bright spots. Intel was up 7% on news that SoftBank will be investing $2 billion. We did also see most of the sectors outside the tech stocks perform reasonably well. And that's how the Dow managed it again, and the S&P 500 was only down slightly despite that weight on the most popular stocks. We also saw good support for bricks and mortar retailers, with Home Depot reporting well and its share price gaining by more than 3% in trading. That did appear to have a bit of a halo effect for Lowe's and Target, both reporting tonight. And if they continue to paint a strong picture of the US consumer, that might see broad market support return. The other major factor at play, of course, this week is reporting. As we heard there, the US reporting is having a deep impact on market performance, as it is in Australia. And CSL was down 17% yesterday after pointing to a restructure of its business and the shedding of around 3,000 jobs. That selling has continued at the open this morning, and CSL remains under severe pressure and seems to be threatening the $200 per share level. We did see Reliance Worldwide also hit hard, down 6.7%. The plumbing supplies group there reporting slow trading conditions. Lend-Lease was down 5.7%. And Woodside, after reporting an increase in costs, also fell by more than 2% in trading yesterday and could be under further pressure in trading today. BHP broke the trend with its report. Its shares managed a gain of 1.6%. It appeared that despite the fact lower commodity prices are weighing on revenues, BHP's operations are in pretty good shape, at least according to the performance they put in yesterday. And SEEK was up 8% as it gave out some details of how it has already deployed proprietary artificial intelligence across its business. The market seemed to really respond to that with a good gain. PopMart in the US, the suppliers of Labubu dolls, something that's a bit of a mystery to me personally, but seems to be very popular, was down 1.4% despite a 400% first half net profit increase. The reality here, however, is that the share price is up around 600% over the last 12 months, and perhaps the market had already anticipated those earnings. The fact that it only came off slightly, though, indicates that overall investors are happy with the outlook there. Turning back to Australia, today we'll hear from Transurban. Iluka has already reported lower profits this morning and could be under pressure in trading. And Dexus and Cleanaway will also report today. So a number of potential movers of individual stocks. But that seems to be the case for this week. The micro, that is all the company reports, are the main drivers, and the macro risk coming out of Jackson Hole is the thing that might be weighing on investor minds as the markets fall in overnight trading and here in Australia today.